What is going on, YouTube? It's Brendan from Market Makers. I have more energy today, as you can tell. Got a good night's rest for once. So guys, no camera again today. We're doing a Halloween festival here at the ranch. I have my sister and her kids here, my brother and his 4 kids here. My parents are here. My other sister and her husband and kid may be coming as well. So I have a lot of people in the house. I have 2 dogs here in the back room with me. So if you hear panting, that's not because I'm excited to talk to you, even though I am. That would be my 2 pups who are currently taking a nap about 5 feet from me. So let's go ahead and jump into this, guys. A lot of people are requesting me to make videos during the day. I like to make them after the market closes so we can get an idea of what's going on. But let's go ahead and dissect this marketplace because, you know, there's a bifurcated TA going on right now, as you guys know. It's a lot of TA people talking about the bottom is in Bitcoin, people talking about this 5.3 multiple or whatever that's going on, which again comes from the bull runs, the longest bull run in the history of the stock market, which is Bitcoin's existence. Okay, we are in a bear market is my thesis, and that's the thesis of a lot of other great bubble trackers such as Michael Burry, Grantham, Dalio. You guys know the list. You watch the channel. So let's talk about what's happening right now. Looking at the DXY, of course, the DXY is once again reversing and pushing back higher. It's currently 112.271. Again, the ugliest. Okay, the dollar, the actual value of the dollar is worth crap. It's worth nothing, but it is the prettiest girl at the ugly ball. Okay, that's all you have here at the DXY. Money flow is still coming into the DXY. It helps out a lot that England pivoted as well. So England pivoted, the Bank of England, they're buying back bonds. They say it's for a limited time because the way these systems break, the way the monetary system breaks in every great financial crisis that we had, the 2 in the last 20 years, the great financial crisis in '08 and the dot-com bubble, is it's always something unexpected. It was CDOs, it was subprime mortgages in the great financial crisis. And of course in dot-com, it was a rapid, rampant speculation with all these zombie internet companies that were worth nothing, like pets.com. So what do we have now? Well, now we have Credit Suisse, which may have problems. I don't know if you guys have been following that in the news, but they've been getting massively shorted, and now there's rumors about UBS. Both are Swiss banks, which is interesting. UBS may be having financial problems. So this is going to spread. This is what Michael Burry was talking about when he said there will be blood in the streets and you will see great bank failures, because everybody can sit here, Congress can sit here, the Biden administration, the bank CEOs themselves can sit here and tell you, oh, we're financially strong. We've always been financial. We've never been more financially strong than we are now, until it actually breaks down. When I was at an investment bank in '08, our CEO did the same thing. Our financial book looks excellent. Watch that movie, The Big Short. Once again, the story about Michael Burry, based on true actual events, and it is very accurate for what actually happened. You're seeing everybody talk about how financially strong they are, and then you're seeing some of these once great financial institutions really start to struggle. So trust me, the Fed's keeping an eye on this as well. They don't want a repeat of the great financial crisis, but guys, I don't think they can stop it. I don't think they can stop it, and we're going to see what happens here, but let's track the price action to see what's really happening here. Going to the S&P, we look at the S&P. Michael Burry recently sent out a tweet. He was looking at the great financial crisis, and he had a circle, and he said, we are here. Okay, this is what I've been telling you guys for weeks. We are here. This is where you're bouncing off the 200, 233. This is the '08 crash. Bouncing off the 200, 233 on a weekly time from getting these rallies. Every time you rally up, bottom's in, guys. Jim Cramer, CNBC. I think the bottom's in. I think this is ready to go up higher. So this is, everybody thinks the bottom's in. The crypto YouTubers looking at their different multiples, looking at their rainbow charts, looking at adding colors to the rainbow. Everybody thinks the bottom's in. And it's great. If it was great, if it was in, fantastic, but it's not in because the economic conditions are going to continue to worsen, my friends. This is a bubble. The bubble is just now starting to deflate, and you will have this leg down at some point. Okay, but what we're actually tracking, if you want to compare it on a 1-to-1 here, we're looking to lose the 200, 233, find this bottom right here, spike back up to retest. Okay, so the actuality, Michael Burry is not a technical analyst as far as I know. He does do technicals, but he's more of a fundamental analyst. But this is the actual zone of what you guys are watching this channel for, because we're right here. Okay, we're right here. We are testing the 200, 233. We're bouncing up with a big candle. Once we lose it, which I do think will happen by that October 31st weekly candle, once we lose it, we're going to come down to a number, and then we will get a big rip-roaring rally up, because once again, everybody will think this is the bottom. Then you'll be testing these are weekly, guys. You'll be testing the 200, 233, and at some point capitulation if we are in fact in a bubble, and that's when you see that massive down leg for that C leg and all of my weekly market patterns. Okay, that's what we're looking at. So that's the actual zone of where we are, and you can see it right here on the S&P on the weekly. Big up candle. But what's happening to this up candle? You're already getting supply dumped on you. Remember, 43% of the indices are bought and sold by algos. These algos, they are programmed to look at different metrics in the market, and I'm telling you, if they view this market as risk off, they will be selling and selling hard. That's why you sell into rallies. So yes, you rally up just like you did here, and then what did the smart money do here? Dumped. It dumped, okay? As retail FOMO'd into Peloton, FOMO'd into ARK, FOMO'd into different cryptos, smart money dumped, and what happens to the market? Because they control the marketplaces. Remember, the goal of being on this channel is to trade with the money, not against the money. You want to trade with the money. Dow realized this over 100 years ago. That's why he developed his Dow theory. Primary trend. If you have to be able to identify the primary trend. Does this primary trend look bullish to you? Okay, pull off your bias hat for 1 second. Does this look like a bullish primary trend? No, it is a bearish primary trend. Therefore, you can short these rallies, okay? However high they go up. This was a massive rally. This right now is a small rally, and we're going to see if it goes up any higher. But you can see that's all because we're bouncing off the 200 and 233, getting that volatility just like we did in the previous great bubbles, okay? Bouncing up and down right in this sector off the 200, 233. You see that? And you get big up candles. These are some big moves. Let's just measure some of these. Grab this wick here, go up here. I mean, this is a 10% move off of that, okay? And I'm sure everybody, once again, thought the bottom was in. And then you roll back down. Oh, now the bottom has to be in. See, we retested it for support. And you get a massive rally and then capitulation, okay? So the market's moving patterns. Again, the key is just identifying the patterns. S&P on the daily, looking at the money flow, we're still below the median line, which is right here in the crosshairs. And of course, we're pointing downwards. This looks like this rally is going to be fading out, guys. And if I look at the S&P here on the 4-hour time frame, just pulling a simple fib retracement from your swing high to your swing low, you can only get up to the 382, and you're already getting a lot of turbulence, a lot of rejection here, forming a Wyckoff trading range, which could either be accumulation or distribution. And I think it's distribution, which means I think it's coming back down. And if we look at this, you want to look at a double bottom structure, right? You see this? So if we looked at a double bottom structure like this, we could take this swing low here to the swing high, down to this swing low, and then look where your 1618 is here on the S&P, okay? You see the 1618, you get above it, you get rejected. You get a big, strong demand wick. This could be a down thrust here. I mean, you can put all this stuff in Wyckoff trading ranges as well. Here you go for your top, your buying climax, and there you go. Now you got some up thrust up here in the range, you fall back down. And now you're getting a down thrust, will you pop back up? If you don't pop back up, remember what you're looking to do is either break out and you roll back down, make your cup go up, test the 200, 233. Or you end up coming back up, maybe get rejected at the 1618 again, make a lower high, come back down, retest, which is now resistance, retest this white bottom line and Wyckoff, and then go back down. Either way, you could end up making a head and shoulders here. You could end up just with a disjointed double top if you just keep getting lower highs and this just starts coming down more. But we'll see. But there's steps that have to be followed. And you're looking at the money flow in the 4-hour, once again, bearish. NASDAQ, same thing, dumped below, closed below, two closes below, actually one close below the 200, 233. This candle is open on the weekly, and you're pumping back up because, again, you're identifying that turbulence around the 200, 233. And if you look at this right here on the 8-hour time frame on the NASDAQ, where are you getting rejected? Very similar across all the indices, guys. It's the same money across all the indices. The 1618 at 11,598. You see that? 1%. 11,598, you pumped up, you wicked it, you got rejected, got a nice demand wick, came back up, got your up thrust, and now you're falling back down again. It's volatility, and I think all of this is turning back down and coming down to a bottom that last week of the October 31st to November 6th candle. That is a weekly candle on Halloween. So looking at this on the 4-hour time frame, 4-hour time frame, again, I threw a Wyckoff top on here, but it's the same exact concept that you guys can see here, okay? You're bouncing up, your 11,598 again is your 1618. Your next support levels is the 1.414 at 11,502, 1272 at 11,434, and the one you really need to watch is the 1272, 11,434, because that's your double top. You see the double top? That's your double top right here. That's basically your neckline. You do have this wick going all the way down, but if you lose that, you're going to start getting a little bit more momentum, probably back towards a 1 fib at 11,305. Of course, your money flow was overbought here, okay? You see that overbought, rolled back down, and then you had some divergence here because you had price rise back up even though the money flow was going down. So this all looks to be rolling back down to me. And of course, the Russell on the weekly, Russell lost to 200, 233. Roughly 25 to 30% of the companies in the Russell are zombie companies. They survive off of debt. They don't actually make a profit. So it gets more and more difficult to survive when the Fed keeps raising the Fed funds rate because loans become more expensive. Borrowing money is more expensive. 0% versus whatever the new rate is, 4, 5, 6, 7%, okay? Whatever the rate is that they're getting becomes more expensive to do business. And of course, the Russell is bouncing up, and I expect this to come down. Just like with the other indices, guys. 1521, we have our pattern. 1521 at the 618, October 31st. And then this will be that back test right here. Just like you saw the great financial crisis in Y2K, the back test of your long-term resistance, which was long-term support, your 200, 233. And this will determine if all of this was truly just a run-of-the-mill bear market. You break it, you go up, or if you lose it, like I think you're going to, this was a 3 sigma bubble, the third one we've had in the last 20 years. And that's when you start getting your massive leg down. And your leg down is going to look like everything else. Big rallies up, moves down. Big rallies up, moves down. And if you watch the media, you watch your CNBC, you watch your Bloomberg, you will hear over and over again all throughout this downfall, well, this stock's 60% off. This stock's 70% off. I mean, you got to buy now. Long-term investing. I'm going to look at it for 10 years. I'm looking at it for 20 years. You got to buy now. You'll hear that over and over again, guys. They do it every single bubble. Morons, okay? They don't understand price action. They only understand fundamentals. And they don't even understand fundamentals very well. If you look at Russell 2000 on the daily, again, the 1618, we never got up there, which is why I added to my short, 1779. And as you can see here, I mean, you have your classic on the daily time frame here, your classic double bottom, right? So you have a classic double bottom structure. And I can paint this for you. I've done this many times now. But you have your classic double bottom structure, and you got your ride up. We went ahead and trend-based fib that. Never got to the 1618. Starting to fade out a little bit. We'll see if this starts pulling down more. And of course, the gummy worm telling us this can come down to the mid 1500s, right? Which I have a target of 1521. So we'll see if it gets there. 8-hour on the Russell, same thing, just a little bit more narrow. I'll go ahead and go through these support levels. Let's do it on the 4-hour. So 4-hour time frame, the double top here you can see quite easily, and you can also see your Wyckoff structure. But let's go ahead and get these support levels for those of you that are trading this. You're getting rejected on the 4-hour by the 150. This is a simple moving average. You could also use a 144 EMA. I've just been playing around with the 150, and you can see you're getting rejected right at 1768. Your immediate support level here for basically your neckline minus this wick flyer here is the 1.128 at 1744. And of course, the 1 fib's at 1733. You lose that, then this is just coming back to whence it started, which is down here. You're going back to 1701 at your 618, okay? You lose all this. This is where this will move to 1701. And then we're back to whence we started, back in this trough, and then looking for further capitulation. And let's go ahead and look at Bitcoin. Dante's Descent. Again, I know a lot of people, I see people send me stuff all the time. You know, look what this guy's saying. Look what this guy's saying about the bottom. Look what this guy's saying about this magic number he found. I get all that. I mean, I'm just looking at a candlestick pattern, taking it back to basics, a candlestick pattern. This is like the basics of trading 101. Read Fred Tam's book. Fred Tam's the first book I ever read on candlestick patterns specifically, that and Steve Neeson's, but Fred Tam, The Power of Japanese Candlesticks. Japanese candlesticks are essentially the indicator of the market. These indicators that we use to lay on top of them really are just to, it's almost like a cheat code, right? It's almost like a cheat code to the market. They have all these extra confluences, but the candlesticks tell you everything you need to know. They make patterns, they make shapes, and you can trade from these patterns and shapes. And you're going to learn a lot of those patterns in Fred Tam's book, okay? So if you look at this, again, 11 bars down, the all-time high, 11 bars down, 9 bars up, swing high. 11 bars down, 9 bars up, swing high. No swing high has been defeated. 25,214 is your swing high. This, I mean, you look at this on the weekly, guys. I honestly don't get what the excitement's about. I don't get what the excitement's about because this is very weak price action. I look at it like you can look at this a bunch of different ways. You can look at this as a series of lower highs, right? You can look at this as a series of lower highs. You could draw this across the wicks like this, just in this current trend. You can see you have a little double bottom here, but you have no velocity to break up. I don't see you breaking this 25,214. And in reality, I see this pattern playing out completely, which is October 31st, coming down to that 12K number or the 10.5. It's only a 1,500 point difference, depending if you want to use a trend-based fib for the projection or the trend-based fib from the previous all-time high to the market low to the current all-time high. You get within 1,500 points of each other. So this is what I'm seeing play out, and I see this happening relatively soon, obviously. Looking at this again, your neckline is 18,603 here on the weekly time frame, because again, you do have this double top, and you do have this series of higher or lower highs. You see this? You have lower highs all through the range here. And again, guys, this just looks really weak price action. You're just basically pivoting off this bottom, and you didn't even rise up much. So this looks like it's just going to roll over, come down to our targets. That first stop may be 16,112, where you come down based off that trend-based fib, get some more turbulence, maybe roll up and then come back down, okay? But these are our end goals here with all the arrows. We're looking at 11,979 spot 5-1, 1618 at 10,591. Let's look at Bitcoin on the daily. Bitcoin on the daily, I mean, this is just, again, it's just weak price action. You can see a series of higher lows coming up through here. But again, no velocity, getting supply dumped on these wicks already. Money flow is already turning bearish. Didn't even get up to oversold. This is your 150 moving down, and your 200, 233 are higher up on the daily. And there's just not, that's at 27K. That would break Dante's Descent, not going to happen. And this would break everything if it pumped up. If it did, great. You know what? I mean, I don't care. We're in profits on all of our shorts that we've been taking, and I've been shorting the Russell since 1997 on the price target, and it's trading at whatever 1750. Everything's in profit. This is why you use stop losses. Same with our Bitcoin short. We got in our Bitcoin short in profit, so everything's in profit. So if it pumps up, it pumps up. But guys, the price action is not indicative of that to me. We still haven't tapped the 618 at 20,779. That's where I really wanted to short it. Instead, I got in at 20,400. I got in one of these wicks. I got in over here at this wick, captured this decline. Then it came back up, shorted it again, as we talked about in the last couple of videos. So, right now, all this is in profit, but we haven't even got to the 618 at 20,779. I don't know. It's very weak to me. And I know people can have different opinions, and, they see what they want to see, but that's okay. But I look at the economy. I look at everything unwinding. I look at rate hikes coming in even higher. Everything globally is tightening and worsening. You can't point to a country where it's getting better. So that's the whole thing. If you're going to start looking at these numbers that some of these tubers are putting out there at 30K, 60K, 90K, big melt up to 90, then a big dump, I mean, show me how we get there. The market cap of crypto is less than $1 trillion. It is like 70% less than it was at its peak. That money would have to flow back in, and that money has to come from somewhere. The DXY is soaring because there's money leaving equities, trillions and trillions of dollars, and there's trillions of dollars being exchanged into dollars because other countries are falling apart. So I just don't see the picture, guys. I want to see the picture. I don't see the picture for a bullish scenario to play out here. We will be bullish when we find a true bottom, and we will trade that rally because that rally is going to be sharp. Remember, Dante's Descent, we have a 50% rally incoming when we actually do bottom. Whatever that price target is, 15K, 14, 12, 10, wherever that price target is, we will have a 50% rally, and that's the rally to trade. So looking at the 8 hour, again, we drew this grid last video, guys. You can see the grid here on the fan, and you're getting rejected, of course, by the spot 5 here on the Fibonacci fan from our swing high. So you're just rolling down here. And, again, I anticipate this rolling down. Everything's going to come back to its range. And most likely, if you're going to use the fans here, most likely, where would you be finding support vis-a-vis the fan? Somewhere around here, right? You'd be finding support somewhere around there. And we can use a trend-based fib here on the 8 hour. Do something like this. Is that the high? That might be the high. And then you have the 1 fib right here, and you can see your targets here. 382 at 19,967, the 0.5 at 19,816, the 618 at 19,665, the 1 fib at 19,177. Again, this is the 8 hour, and the 168 would drop you down to 18,388. So all of this is possible, but let's go to the 4 hour. 4 hour is where the action is, okay? 4 hour time frame, and this to me, I mean, this is just when you look at this, you take the noise out of here. I mean, look at this. You have a beautiful double top. That's all you've done. There's nothing bullish about this structure. You're below the 233. You're above the 200. You found support, some demand here on the 200. But this is a perfect double top. Let me look at this let's see if we threw a dragon here. Get our dragon tool. That's perfect, and that's perfect. You have a perfect dragon here. This is a perfect double top, okay? And again, this is a dragon pattern. You guys can learn these Fibonacci patterns in our room. You can click the join button underneath this video. Come join us, 11,000 people there, professional traders there. We do live streams. We have educational videos and a fantastic community. Support us by checking out the links in the video description, my friends, for SimpleFX to trade these equities and BITGET to trade the cryptos. Use our links, get our bonuses, and help support this channel and room. Really would appreciate it. So this is what I'm looking at here, guys. I want to see what this looks like. I don't know why I keep doing this now. Now it's just fun to do. But looking at it on a line chart, you can clearly see the double top, right? You can clearly see where you're getting resistance on that imaginary 233 EMA. So let's look at this. Again, if I was going to do a trend-based fib, from that swing high to that swing low to that swing high, this is what you're looking at. You're 618, and look where it's at, 20,006. You're at 20,037. You see that? So you're trying to keep above this right here. You're trying to keep above this, but you got the 233 rejecting you. If you don't defeat that 233, guess what it's going to do, guys? It's going to come down. It's going to try to find support at that 200. Actually, look where it wicked. I said it found support at the 200. It literally found support at the 1 fib at 19,728. And that actual price there is 19,723.5. So within $4.50 on a $20,000 asset. And this is why, and I say this occasionally, Fibonacci trading, understanding the power of Fibonacci toolset is so much better than watching guys draw big colored boxes. Well, this is a big support area. Well, that's fantastic. There's like 1,000 points in that area. It's not very useful. Fibonacci can get you down within dollars of the exact zone of where you're finding support and resistance. So it's a tool set I highly recommend to everybody to check out, okay? So looking at that again, so your 1 fib would be 19,728 if you do lose the 618. Your 1618 is 19,279. That would be price breaking down, breaking back below the 200, which is going to at some point, 'cause this is a 4-hour time frame in a bear market, breaking back down below and coming down to 19,279. Looking at Bitcoin on the 1 hour, again, you can see the larger double top structure here as well. You can see multiple smaller double tops, but just looking at the macro structure, you can see a double top structure just like that, okay? And if we look at Ethereum again with our box here on the 4-hour time frame. So we shorted this a couple times. I know some guys shorted it here. We had guys in the room short it here, but I shorted it here, or I talked about it yesterday, shorting it here, and it came down a little bit, came back up, but it looks like it's rolling back down again. It's moving with the marketplace. And if you look at this again, what are you doing? You're making a double top, okay? You're just making a double top if this continues to decline. It hasn't pumped up to even test its 150 or 233. This is your 618 up here at 1363, which is providing a lot of resistance. Ethereum's at 1361. So once again, it is below it. Right now, it's below the 618 again at 1363. We'll see if this holds up or if it starts capitulating. But when it capitulates, if it comes down, guys, I mean, you formed a classic and beautiful double top with the 382, your neckline at 1316 spot 91. You break that, you're coming back down to the middle of the range at 618 at 1282. And if you break that, because this would be a larger double top. You see this? It's just another double top. You always have to look at the macro structures. I can do this on the smaller time frames. Some people find it easier to go out to like the 8-hour. This is a 4-hour, and then you'll see less candles. But you can easily see this would be a much larger double top, okay, if it comes back down to the 618 at 1282. But within this structure, you have multiple double tops that break down and come back up, just like here, multiple double tops. So it's just structures within structures. It's all part of pattern trading. XRP, same thing. XRP, we've had some really good shorts on here, momentum shorts. Price falls down, comes back up, shorted again, price falls down. Now price is in that zone where it's coming back up. Ideally, if you did want to get in on XRP, if this does come up, it's above the 233. 1618 at 51 cents. As close as you can get to that 51 cents should provide you an excellent opportunity to reshort this, okay? Excellent opportunity, because I do think all of these things will be rolling back down, okay? And again, these targets on XRP, the 1272 at 46, the 1 fib at 43 cents, the 618 at 38 cents. You see that? That's your 618 down here at 38 cents. So this is what I would be doing. This isn't a bad short here, but if you were going to trade this, and I was talking to guys in the room about this, if you were going to trade this, you need to look at your wicks, look at your swings up here, and be above something, okay? You got to have some type of structural resistance. So the 1618 is at 51.4. If I was going to trade this, my SL, my stop loss is definitely going to be above 51 cents, okay? It's got to be above 51 cents. And then I'll be looking at one of these levels up here, maybe 53 cents or 54, 55 cents, in case this does come up, make some spiky tops, and then roll back down. Always got to think about the long game here. Phone is blowing up. Got a lot of family here. So the gold. Look what gold's doing. I mean, tell me that's not a double top. So gold is making a beautiful and perfect double top. Let's get our projections really quickly here on gold, and let's go ahead and do gold. Swing high, swing low. Swing high. Your 618 is basically your neckline. You got some wicks, but candle bodies, your 618 is basically your neckline at 1707. You see that? Your 1 fib would be down here at 1696. So this is where gold's at. Let's get some more fibs on here. I don't know where all the fibs are off. 382.5. And let's look at the 786, 886, 1618. Give you some targets here. So you break the 618, 1707, 786 at 1702, 886 at 1699, and the 1 fib at 1696. But in reality, if this does start breaking, and if you lose the 1 fib, okay, this is why I don't care about these smaller fib, the intermediate fibs as much, because they're not primary fibs, 786, 886. But you lose the 1 fib, you have a bias to a reversal, and that reversal basically has you reclaiming this pump, which brings you back down to 1678. Okay, that's where that reversal will take you. Looking at silver, yeah, similar thing here. If we do silver, let's get our double bottom structure here. Take that. You got up above the 1 fib, and you're getting tackled right now by the 150 simple moving average. $21 right here at 21 spot 93 is your 1618. I don't think silver is going to surge up there, but you know, we'll see. And of course, if you zoom out, you can get larger double bottom structures as well. But this is where we're at. And if you do add some of those secondary fib levels, you're probably like at the 1272, right? Let's just click that and see. Yeah, you're at literally right at the 1272. You got a wick above it. So this is where your trading range is right now. But again, this will roll down when the markets roll down. The metals have been trading with the markets, which a lot of people don't believe, but that's what's happening. The markets rallied, metals rallied. And in a time of 40-year high inflation, you think metals will be a lot stronger than they are, and metals will be, but the markets still believe the Fed. They still believe the Fed's going to get everything under control, and until they stop believing the Fed, metals are rolling with the markets. And of course, in the great financial crisis, gold went down 34%. I do think you will be able to buy gold at 14.25, 31% retracement on when these markets actually do start to come down. All right, guys, I'll make sure to interact with your comments again today. So go ahead and leave your comments and check out our trading room. Check us out on Twitter. Check out our Rumble. Check out the video description. Save me some time from saying it all. Has all the information there. And definitely check out our platforms, guys. I hope you guys have a fantastic day. Good night and good luck, everybody.